Hello traders, Gary Wagner here. Approximately 1:30 in Honolulu, 7:30 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 10th day of September 2021, and this is the daily report for gold and silver, our weekend review, and what a difference this week is compared to last week. Of course, last week on Friday we had a tremendous rise due to a disappointing jobs report. Today we saw gold decline in double digits, down about $11. We'll discuss that along with silver when we pull up our charts and really take a hard look at the weekly chart of gold. We'll begin that now. This was definitely a difficult week for gold, capped off by today's decline in the December gold futures contract, closing down by $11.80 and is currently fixed at $1,788.20. In fact, this is the first decline on a weekly chart in 5 weeks. In other words, the last 4 weeks all contained higher highs when compared to the previous week, higher lows and higher closes. We'll talk about that when we look at our first weekly chart. Headwinds from dollar strength provided some of the pressure taking gold lower, although the vast majority of today's decline was selling pressure. The dollar gained almost 0.2%, 0.18%, and is currently fixed at 93.645. This first chart that we are looking at is a weekly candlestick chart of gold futures. We can see the bottom that occurred during the flash crash, which was the week of August the 9th, and that was following the jobs report for the month of July. It came out exceedingly strong, over 900,000. Then we had a very, very disappointing jobs report, and that took place a week ago Friday, and that represented this green candle here. So up until this week, for the last 4 consecutive weeks, we have had a higher close when compared to the previous close, a higher low, and a higher high consecutively for 4 weeks in a row. That all ended today when gold opened up just below the close or just at the close and closed significantly lower at 1788.20. We, of course, put a long position on. We are long at 1795. We have stops at 1770. Our stops have not been threatened, but I am disappointed that we didn't get follow-through buying and get that effective close above 1800. We'll talk about that when we pull up our daily chart. And our daily chart truly illustrates what we have seen in terms of how gold is traded and key and critical numbers. Of course, that elusive $1,800 per ounce, it also lines up with the 23.6% fib retracement. We can see that including today, for the last 3 trading days, we have challenged but unsuccessfully that key number. We can see the occurrence of the jobs report that was quite disappointing. That is this on Friday, and this long red candle here represents trading on Tuesday. Of course, we had a shortened week due to the Labor Day holiday. Now, we did get a higher high and a higher low than yesterday. However, we closed significantly lower in terms of the actual final price. And my hope is that as trading begins next week, we will either trade sideways, which is, I believe, most likely as we get closer to the FOMC meeting, which begins on the 21st, or hopefully see some event that takes gold prices above 1800 on a closing basis. My recommendation is to maintain our current long position as well as our stop. We will watch it very carefully as it opens up in Australia, Asia, and London on Sunday here in Hawaii, as well as the mainland. However, it was silver futures that experienced a much more dramatic decline, giving up 1.72%, a total of 41 cents, and with December futures currently fixed at $23.76. Over the last couple of weeks, we have spoken about the fact that silver and gold, in terms of the way they move and their price structure, has basically had a disconnect to the normal relationship. That is not true for today. We are seeing what we would normally expect on a down day, which is silver having a larger percentage drawdown than that of gold. And that's exactly what we saw. Now, in terms of what we are looking at, I point to support and resistance. I believe that there is strong support at about 2370 to 2375. The low comes in right above 2372. In terms of resistance, it has to be pegged at the 50-day moving average. This, of course, shows us two occasions, Friday and then Tuesday, in which it either tested that high and failed, or opened just below that high and then track lower. We have now seen the market go lower for the last 4 consecutive days. Even though yesterday was a green candle, meaning it closed above its open, it did contain a lower low and a lower high than the previous day. And except for today, where we had a slightly higher high, we also got a lower low. And so we've had 4 consecutive lower lows since the big move a week ago Friday. Maintain your current silver position and stop. Exactly 20 years ago tomorrow, September 11th, is when the Twin Towers in New York were bombed. We want to take a moment of silence to remember and memorialize those souls that were affected during that tragic event. We also want you to know that our hearts and souls go out to all of those affected by the current pandemic. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you on Monday for the next daily update and review. Bye-bye.